Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Hey everybody, Coach D here. I'm going to walk you through the coolest Condor you've ever seen. And I'm going to be using a stock that we talked about in the coaches show in our new segment, The Huddle, where we were talking about current strategies for this week. Nailed this one, just nailed it. So we picked the stock is CVS. And you'll recall from the coaches show that we identified the bearish retracement right here and the old support resistance zone. Again, the coaches show is on Tuesday, so you go back a couple days and we nailed it, right? I mean, just right at the top. So we're looking for that support resistance bounce, kiss goodbye. And they got an earnings announcement coming up here. And really the CVS, they are, of course, the pharmacy. You've been in their stores, of course. And now that Amazon's getting in the drug business, they're seeing some fear and competition. So the price is dropping pretty hard. And it's been a pretty sideways stock, but it broke support and just gave a real good technical setup. So we started out the trade with just a simple strategy. And I did this, simple with, just a simple long put for the month of December. Bought a little bit of time, not too much time, but about a little bit of time, and paid for the long put. So this is the one we bought right here. Long put plus one, and it's just a $75 put. Okay, and the stock, we only paid $2.73 for it. So we had a maximum risk of $273. Okay, that's what the risk graph does, and then that's the $75 strike price. Okay, that's where the graph bends, and we paid $273 for it. So 75 minus $273 is where the break-even point is. And then you have unlimited downside gain, but the stock's not going to go through the floor. It's not going to do that. So as it starts dropping, I had the order set up to sell the lower strike price and to actually bring in some profit. And so what happened is as it was dropping and the prices of the puts, the premiums are increasing, okay, sold the 72.50, the lower strike price put, sold that and brought in $2.83. Now, you don't even have to be that good at math to know that $2.83 is more than $2.73. So when that trade goes in, it turns it into a spread trade. And now we have a risk-free trade. Guaranteed $10, cover your commissions, up to a $260 gain. And that was just within a day of the stock price dropping. And so now, again, I look at the chart and it's dropping real hard today. But I already start to suspect that it's in a support zone and it'll probably find some support down here. It's not going to, again, go down forever. And we've got an opportunity here to change this trade one more time into an iron condor. And we're going to do that, or a put condor. It's not a put, not an iron condor, excuse me, but a put condor. And it's going to turn into the put condor. What we're going to do is we're going to sell the lower strike, the 67.50, and then buy the 65. And we're going to wind up with a trade that looks like this, where we bring in another $1.90 and change, and then we're going to go spend, and I haven't even done the split on the bid-ask spread yet, we're going to spend a little bit of money buying the $65 put, and we'll wind up with a trade that's relatively neutral, that's guaranteed to make at least $64, which, I mean, return on investment is phenomenal on that. Doesn't sound like a lot of money, but percentage-wise, this is scalable. So pretty awesome there. And just a trade where you could make $300 as long as it stays between the prices of 73 and 67, and you could make anything over $60 between 75 and 65, so a $10 range. So you can kind of look at that on the chart and say anything between, and this is what happens when stocks break down, by the way, they break down and then they come back up, and so anything between 73 and 60 down here, you're going to have this big profit zone in here, this whole area down in here where you can make a lot of money, and you don't have any money tied up in the trade. So all the money we put into the trade's back out. So we literally have $0 tied up in the trade. When you have $0 tied up in the trade, your percent return is now infinite. And I want you to stop and think about it for a minute. We put some money in, within a day we got the money out. Then we brought more money in, and we have a trade with $0 tied up into it, which is awesome, by the way. And the return, regardless of what it is, when you divide the reward by the risk, which is 0, and the money tied up into it, you have an infinite return, when you have a calculator that does calculus. So we are in awesome shape. And again, this is Coach D with TackleTrading.com.
Isn't it time you got off the sidelines and tackled trading? Join our online community of active traders where we make it happen every day. Stocks, options, futures, and Forex at www.tackletrading.com. Get in the game.